Welcome back, folks. Dow right now up 218, Nasdaq's up 4, S&Ps are up 12.5. Let's go over to our man, Mr. Jason Pfaff, as we do every Tuesday and Thursday at quarter past the hour. Jason, what's going on, brother?
Tom, it's an exciting market today, man.
It definitely is. And, you not only gave me some great notes, man, but we got some great charts out here today, too. So,
absolutely, yeah.
So talk to me about these charts. The first one I got up on your PowerPoint here is sentiment is terrible.
Absolutely. We've talked a lot about the health impacts and the shutdown, and we all understand that. NFIB and some others are starting to release some data. At this point, over half of small business owners in the country expect to be closed within the next month. I mean, just an astounding statistic. 15% have less than a month of cash on hand. 35% expect to be closed in 1 to 2 months. You put those together, you're starting to get over 50% expect to be closed in the next 60 days.
That's pretty intense, man.
Not all of them are right, but guess what? Some folks who expect to stay open are probably wrong about that too.
Yeah.
You talk about 50% of the small businesses in this country on the brink.
That's amazing. And you know what just happened here, folks, is that you may not know this yet, but what happened is that OpenTable just come out, Jason, and said that their data is showing that 1 out of 4 restaurants aren't even going to open up again.
Ever.
Yeah.
Just gone.
Just gone. Right
That's
now.
right. And we've talked a lot about commercial the last few weeks. I just want to reiterate the point. A lot of the way a lot of your commercial leases, which, by the way, a lot of us, in our retirements have REITs, and, REITs are a rather large part of the underlying financial system. A lot of the way a lot of those leases are written is a percentage of sales.
Yeah,
part of your rent.
Right.
It's not just a check, right? So,
right.
Cheesecake Factory doesn't come back to a mall. That's a significant, that lost revenue is significant in addition to the vacancy. So to your point, a quarter just gone. I think more folks haven't made that decision yet that may get there, right? I mean, I think it'll be more than that when we get to it. And that type of carnage in the economy, it's hard to price, but, I think the idea of a V-shaped recovery is gone, at least in my mind. And for some folks who were touting that 30 days ago, I don't hear that talk as much anymore, right?
Well, it's amazing. When you're in business, it is a lot easier, I think, to comprehend that you can see a lot of businesses not coming back, because what happens, folks, is that, you have cycles in businesses. I mean, and you got to make sure you have plenty of cash for those cycles as when you're going down the bottom versus up the top. And you can even have strong businesses that just don't have enough cash, like for 4 or 5 months. I mean, that's normal, right? I mean, it just depends on how high your overhead is. So it's sad, man. I mean, but it's real. It's, where you're going to get the money. And then I guess the question, Jason, is you can get the money, but do you really want to put that money in the business again, or turn around and say, okay, listen, I'm a smart woman, a smart guy. I can get a new business in this era of how we're going to be dealing with things for a while, That's
right. I mean, you've got a situation where folks are, the term others use is a zombie business, where you're propping it up with cheap borrowed money, but what's on the other side?
Exactly.
And you've got, again, some folks in that category now. Some folks are opting out. Some folks are trying to keep that going. But to your point, the market doesn't clear like it should. And it seems to prolong things. One of the charts I sent, some of the data I'm looking at is, if you look at bankruptcies right now, are not where you'd expect them to be, just all things considered. We're not as far along in bankruptcies.
So I have this chart up here right now, bankruptcy. So
two ways to look at this, right? You could say, hey, they're up, right? But we would expect them to be up more.
Yes.
We're looking at Chinese data too, just to compare. So bankruptcies are up, but not maybe as bad as you want. But when you look at search data, like on the right, that light blue line,
okay,
it's just going through the roof, right? I think we're early in the wave of bankruptcies that are coming.
Yeah.
I think it's going to be unprecedented. You can see that Google search data, if anybody wanted to question the efficacy of it, it mirrors this. If you go back to 08, 09, 010,
yes,
it mirrors the pattern of bankruptcies almost perfectly, right? And so when you look at the intensity of bankruptcies tripling, that search volume points to 2.5x over the coming few months as we proceed through this year. What we've felt right now in the economy is consumers been hit, folks are out of a job, but that cascading effect of bankruptcy spiking 2.5x in a 60-day window. And we're talking about, I was on the phone with somebody earlier, large trucking company, right? A large brand name trucking company is planning to file tomorrow, Monday. It's a name that would blow you away. And, just not something you think about, because we're talking restaurants, movie theaters and stuff. But these folks are like, we've got a ton of debt. They deal to clothing stores and all kinds of other places that are just shut down. Half their business is gone. And when you're looking at this, can't sustain.
Yeah, when you're looking at this chart, folks, okay, so remember, Tiger TV, you get everything right with it, videos and everything. And on the right-hand side, folks, you're going to see that blue line. What Jason's talking about, this is the search before the fact that these companies are going bankrupt. They're looking for lawyers, they're looking for accountants, they're looking for the best, that they can probably find, so they can, hope to get the best bankruptcy that's out there, versus what has already happened. That's a wild shot, man. Holy cow.
Yeah, I mean, the storm is coming. Would be how I'd summarize it. We've all talked about divergence in the market.
Yes.
And, I don't see it in terms of the market being resilient or robust to what we're about to see.
Totally.
I think people ask me now, is it as bad as I think? And my answer is no, it's worse.
Right. Hey, can we
when you're talking about?
Can we go back to that first chart again? This is the NFIB, okay? Because this is a big number. So when we're looking at this chart, if you can just, I see. So this means,
under current economic conditions, over the next 60 days, more than half of business owners expect to close.
Oof.
Right? And folks, we're talking about, we're just going to flip a switch and open back up and V-shaped recovery. I mean, nothing points to that. To your point on the OpenTable data, we can look at, mobility data. Movie theaters still haven't sold a single ticket. And the problem is, with the smart people that I talk to, we're talking about, when you open, maybe you just start bleeding more cash. At least while you're closed, you're not bleeding cash, because you have to pay to staff it. Where I live in DC Metro, they're talking about like takeout retail and stuff. And people are like, I'm going to be paying people, to staff a store that does 10% of the sales they used to. That sounds worse than just remaining closed, taking low interest government money and trying to ride it out for 30 more days.
I can tell you in St. Pete, we're downtown St. Pete, and I can tell you absolutely, a couple high-end restaurants have not opened yet. They're still doing, they're doing a 4 to 8 pickup, okay? And I understand that, because then you're just talking, a couple cooks, a couple people there, versus these places are big places and they have 40, 50 people in them. It's like, hey, man, that overhead is going to kill you. You know what I mean? So
That's right.
I think they're sitting there waiting. And what's intriguing about it, Jason and folks, is that these couple of restaurants that I'm talking about have money. I mean, I know the owner. They have plenty of money.
Right.
But they're saying, hey, man, hold it. If I open this, then the amount of expense ratio is monster, man. It's huge,
That's right.
Pretty
That's
wild,
right.
Man.
Yeah, and then we talk about sentiment, not to switch topics too dramatically here, but, there's things that folks just aren't even thinking about, right? Like, we have probably the most contentious election any of us will live through over the next several months. The uncertainty and the hit to markets that'll come from the election. I mean, the chairman of the Senate Intel Committee resigned today, right? Nobody's talking about it because of the virus.
Right.
There'll be a hit to markets just from the political uncertainty and other things going on in the macro environment.
Unreal. Listen, you have a great weekend, safe weekend. Look forward to speaking to you next Tuesday.
Can't wait, man.
Thank
Enjoy
you.
it.
Stay right there, folks. We'll come right back.